Hello traders, welcome to this week's market overview. And what we're going to do, we're going to go to the charts and we're going to review the Euro Yen, the New Zealand dollar, US dollar, and crude oil. We're going to start by reviewing the Euro Yen because we do have a long position from last week right at these levels. So what we did here is we went long at the 76.4 at a test of this previous high, now testing as a low. And of course, we also had, let me just zoom this in. We did have some buyers coming in and stopping price to break to these levels. You can see the rejection candles. Now, if we put on the market profile, you can see that this was actually a heavily or an area of heavy volume and a real important point of control at around 112.66. Now that we actually opened higher and we have broken with the 113.22 point of control, we are in the money for about 100 pips. And what we are doing here is actually just trying to trade the bounce of this area and the retest of this important zone, which is also a heavily volume area. As you can see here, we chopped around here, around the 114.50 zone, and buyers could not break through it, making price drop to the lows at around 111. And now, price when we had this absorption candle around July the 12th, price moved all the way up to this previous support level, tested it, and now we are back down testing the 112. All right, so what we are doing here is we are going to wait for the reaction of price to these levels. We are going to take our position out at around 147 pips in profit. Right now we are on a free trade, but what's interesting about this, let me just zoom in again on the chart, is that if you look closely, we have the market profile right here telling us that this is in fact an area of previous heavy volume. So price might go all the way up here, but it's going to take a lot of buyers to break through this zone and absorb all of these sell orders that are going to be placed at around the 114.20, 114.50 zone. So basically what we're going to do is we're going to take our money off the markets and take our profits, and we're going to see the reaction to this zone, which is also the 50 Fibonacci level, or the 50 retracement of the entire move to the downside. So basically this is our plan on the Euro Yen, and this can go two ways. We can actually get a reaction, a bear reaction, and a retest of the 111 zone, or we can actually break through, buyers can actually break through this zone and get a retest of the area on which we are going to look for a long opportunity for a test maybe of the 117.50 zone. In any case, we are not trying to predict where the market is going to go. Right now we are in a long position and we are going to wait for the reaction before we take any trading decisions. And well, we are moving in a down channel, but this can also be a bull flag of this move to the upside. If it is a bull flag, it's a very deep bull flag because price has retraced around 76.4. But all eyes are on these, or at least our eyes are on this 114.50 zone for a clear reaction, or to whether we are going to look for short or long opportunities. Now we are going to focus also on the New Zealand dollar, US dollar, and the reason is that on Wednesday we have the Reserve Bank of New Zealand rate decision, and if we look at the historic releases, you can see that they started to cut this rate around June 2015, and it has been cut all the way to the 225% level. And I'm sorry, let me just take this chart again. And as you can see, well, we are expecting a 25 base point cut to 2% on Wednesday. Now, this would mean that the New Zealand dollar will depreciate on the short term and the mid-term. And if you look closely, for example, right here on March 2016, on which the expectation was that the Reserve Bank of New Zealand was going to hold the rates, and they in fact cut it 25 base points, is where well, this is the point where the New Zealand dollar started to depreciate against the US dollar, and in fact it dropped for about 1200 pips to the lows. Now that on the past release, the Reserve Bank of New Zealand decided to hold the rates. Well, the New Zealand dollar started to move to the upside against the US dollar, but well, the markets are right now they are positioning themselves for a rate cut on Wednesday, which would mean that we are going to be looking for a New Zealand US dollar short opportunity. So what we have here is well, a very wide channel, up channel, and we have three levels to look at. In fact, we do have this entire level to the upside, which the New Zealand dollar, US dollar already tested once. It faked out of it twice, and right now it tested it again before moving to the downside. This is the 4-hour chart, and this red bar right here, let me just zoom in, is the Friday bar on the non-farm payrolls. We actually had a long position on the New Zealand New Zealand dollar, US dollar from this 113, and we closed it right before the non-farm payrolls for about a 43 pip win. But I mean, we were aiming at a retest of the 72.40 level. That really doesn't matter. What we are looking here is well, a very rangy market at the moment, and we are expecting price to move down, at least to retest this ascending support, or the 69.70 level, which is also the 50% of the entire move to the upside from this low to this high. And if price does retest this level, we are going to maybe look for an opportunity to short higher for a break below. But that really depends on the decision of the the Reserve Bank of New Zealand to hold or to cut the rates on Wednesday. What we are looking at, if a rate cut happens, is a test of the 67.50 level, which is also these lows right here, for our short targets on a rate cut. But for the time being, we remain flat on the New Zealand dollar, US dollar, and these are the levels that we are looking at. Now, if we look at crude oil, this is WTI, this is the CFD for crude oil. You can see that we are really in a down move, but price reacted to the 40 level, and now it's testing the 42.80 level, which is the 50 Fibonacci, or the 50% retracement from this area of support to the lows of the move. And if you look closely, you can see that we have two channels drawn on our charts. We do have the bigger channel, or which or the one we called the stronger channel, and we have a thinner channel inside of the stronger channel, which you can see in dotted yellow. Right now we are testing exactly the previous lows, the 50 Fibonacci level, or the previous low are around 42.80. The 50 Fibonacci from this level of previous support tested as resistance, and the lows of the move, and this this yellow channel inside the blue channel. So basically what we are looking here is maybe a reaction to these levels and a break of this up structure. Now let me just zoom in a little bit, and you can see that we are actually in a very nice up move, making higher highs, higher lows, higher high, higher low, higher high. Maybe if we break with these lows right here, we can get a retest of the 40 level. But I mean, this is by no means a short opportunity until we break with this up structure, okay? Because price can easily come here to the 41.50 level and then break through to test the blue channel, or even higher, the 44.75 level, which is the 76.4% retracement of the entire move to the downside. Okay, so in order for us to have a bullish, a bearish view on crude, we need to break with this structure, this level, and when we break with it, we can go and look for a test of the 40 level. If not, maybe we can get a retest of that level for us to get long and break again and make a higher high. In any case, we are flat on crude oil until one of these two things happen. And the reason we remain, flat is because we really do not anticipate price. What we do is we react to its reaction to certain levels.